Welcome to a practical application of MarketColor. The MarketColor profile allows you to quickly identify the guts of the market, to really understand the true state of the market, of what is happening. The color profile gives some good insights, and you can really kind of search out different profiles that work with your strategy. One that I like is called a dynamic channel, and we can sort by that. And what this will do, it'll show me markets, the color profile for every dynamic channel for every market, and I like to look for when the market's at an extreme. So today we've got the Nasdaq, the cotton, copper, and the Euro Stoxx VIX. These are markets that have been really pushed to an extreme. So the Nasdaq was going to push to the upper extreme. We've got cotton that had a negative shift, and we have copper that had a positive shift. Our expectation is that the market is either going to retrace after that positive shift into the extreme, or we're going to have it kind of shift back into digestive. So what we're not expecting to happen is the market to continue in that same direction that generated this extreme signal. If we do get a positive surge early in the session, we're going to look for that surge to exhaust, and that's going to be our trigger. It doesn't mean the market's going to reverse. It could go just sideways and kind of have more of a non-event day, but there is a potential for a decent reversal when markets get pushed to the extreme. So for copper, we have a yellow dynamic channel. The market's at an extreme. We take a look at our MC value plot, and this market is transitioning through the neutral zone. So we're still here. Can this market go a little push further into the neutral zone? It can. It can, coming up to this top where the neutral zone turns into the bull trend. That's kind of a natural barrier. Just as it's stabilized at the edge here, the market looks like it's transitioning through to the upside, but we do have this dynamic channel. So our expectation is that we could get a rejection as the market pushes into that extreme. And if we take a look at the action, here's the prior session that really pushed it to the extreme. And what happened then, the market did come off later in the session. We had some digestive action, which is an expectation of a yellow dynamic channel. And then the market continued to kind of grind a little bit higher. Not as aggressive because it's being held back by this extreme signal, but it's kind of approaching the upper edge of the neutral zone. So cotton is another market with the dynamic channel at the extreme. And we've had this market that it was kind of working higher through the neutral zone, and then we had a pretty big negative shift. So this market is getting extended to the downside. It does have a little farther to go. One thing I want to bring in here is just this structure that you see with the neutral digestion. So we know we're in this extreme. Where can the extreme go? It can come down to this lower trough point. And with our price map analytics, we've identified that low price point as 69.74. This is our R level, our sentiment bias level. It identifies really the over-under number for the day, and when it's in a neutral digestive state below the market, it helps to define this expectation of the lower trough. So we can take a look at those figures, and here's the structure. It's plotted on the graph, and we had the market push into the extreme. And where can it go if it continues to press to the extreme? It can go down to sentiment, and that's what it did. Expectations from here is that the market's extended to the downside. We've got the yellow ADX, and we anticipate a bounce out of this area for cotton. Nasdaq is another market with a yellow dynamic channel. A lot of different things going on in Nasdaq. We've got a buy signal in our DMI system, buy signal within a positive trending moving average system. We don't have follow-through potential though. The trending indicator is brown, so it's telling us that we have a market that has had a buy signal but not follow-through potential. RSI is bear trend. It's in the red position. So that's telling us that this might be a little overdone to the upside, and that might add weight to this dynamic channel that the market's extended to the upside. So, we have we're looking at the MC value plot. We've got the market that did kind of a big surge into the from the neutral area into the bull trend area, and we may be a little ahead of ourselves. This market state is what we call a bull trend digestion, and so part of that condition is that this market could be choppy. Typically the market has made a sharp advance in the prior session and needs a sideways session or two to catch its breath before it can resume the bull trend. So we've had this big surge, and we could have this sharp pullback into a digest. That's the price action expectation. And the attributes for this state are more digestive, where kind of a volatility could kind of decrease, more of a sideways expectation. But the market can't. If it had this big peak, you'd expect kind of a market that's going to have a kind of a corrective trade, searching for that support to stabilize. It's important to understand that the market color is identifying really market truths. This is what is, and you can see that for a fact, yes, the market did have a big positive surge, which is part of this characteristics of this condition, and a little overdone, a little ahead of itself, and it had just basically a pullback. Rally is just a little bit ahead of itself, and we have kind of a drop back into neutral, trying to search for support, and that's what the Nasdaq did. We could take a look at the structure. The price map action qualifiers define the structure of the state, and so we saw the sentiment bias, and we have what we call our critical range with the upside pivot and downside pivot. Midpoint's the directional. And we can see how the critical range is framing out this expectation. And so here we have a failure, and the market is moving down into this area, pressing that downside pivot area. Is it going to stabilize and have a reaction, or are we going to have another press down to sentiment? The key is the tells from the condition. We have an expectation that this can be a digestive trade. Market got pressed a little bit to the upside too quickly, needs to catch its breath. We could have a low volatility one-way price move, which is common, as well as choppy false breakout signals at the extremes. Another part of this state is bull trend digestions can be the precursor to a negative transition into a broader neutral market state. And the tell for any shift is a break in positive structure. So observing this price action, in the context of this state, within structure, provides clarity to if the current condition is going to persist or the market's going to transition into a new market state condition. Can also do a sort by MC value change, so this can be interesting of markets that are in play. Are they overextended? Take a look at the Euro stocks. We've got a market that does have some trending ability, had a positive signal in its moving average. A lot of brown still going on, and we had this big surge. So we have an MC value change of 9. So that's a little overdone. It's a little extreme technical shift. So we know we've had the big MC value change. We can take a look at the characteristics. And so this condition is a bull trend acceleration extreme. Markets produced a major positive technical signal, but typically this technical signal is either a one-day event and can produce a counter signal break back in the direction of the previous bear trend that the market was in before, or we're going to get a positive follow through confirmation, confirming that this market is in a major transitional shift from a downtrend situation to a positive trend situation. And so typically after, in the morning they're going to make a decision. We have a little volatility fight between buyers and sellers. Which scenario is going to play out? Are we going to extend this new scenario, this new transition, or are we just going to fall back into and revert to the negative action that prior to that big technical signal? So here are the session times. Here's the big positive signal. Market comes off, and immediately, we get that turn. It's more of that one-day event. We had this big surge, and we break underneath this price structure, and we start to, pull back. But this is the expectation. Right from the get-go, this aggressive momentum should be following through, and it's not. And so when we look at the color profile, we do have a purple ADX. We did have a positive signal in the moving averages, but we look at the MC value plot, and we move from the bear trend situation all the way through the neutral zone in really one fell swoop. So it's either just going to continue with that emotion, or we're just going to get that pullback, and that's the expectation. And so when you're coming into the session, if you don't see that market working positive price structure, and just kind of this aggressive action, you've got this, the conditions and the expectations and the attributes of this state, you're more likely to see this market just fall back into a digestive trade. So you have that expectation, or and negative. And part of this, if it is a one-day event, what can happen then? Well, we can just kind of continue to trend lower into the close, and it's exactly what they did. So the long gilt had a big signal transitioning through the neutral zone and generating a buy signal. So it started out in the neutral area and is just getting into the buy area. So it is generating actually a bull trend acceleration condition. So we have a market that had a big technical positive signal that will follow through immediately if valid. The positive market structure is expected to steepen. This is our expectation of price action. Good momentum, good positive momentum. Many technical signals have produced a positive signal, and the market should just go. If not, the prior period's move may be it for the excitement, and with a break in structure signaling a digestive condition. So if this market can't hold this really, continue to just stay super aggressive, it's vulnerable to breaking back into more of a digestive trade. So for the gilt, you had the big gap higher, and that that really was generating that positive signal, and they closed on their highs. If this market's going to continue, you should see this aggressive positiveness go, and it doesn't. Right off the opening, it pulls back and breaks this price low here, and this was kind of a tell that, okay, we're more set for more digestive action, and that's what we got in the gilt today. So this is setting your expectations. If this market's going to accelerate and go, it's going to go. When they gap lower on the opening, they're not going. And so when they're making this push here, you've already broke structure. And you have this, when you're viewing the market action within the context of the state, you have an expectation that, hey, if they're going to run, they're going to look like this. If they don't look like this, then this is no longer true. And what can happen? Well, the market can break back into digestive trading conditions. Now, the nice thing about the market color grid is we can sort by market state. One interesting state is a neutral positive shift. You had a market that's in neutral, and it had a positive signal. A lot of times you can get some good reversal actions off of that, because the market's extended one way on the neutral side, and it's pushed up here, had a shift from the lower end of the neutral zone. Maybe they get a positive shift into the upper end of the neutral zone, and they're going to, if they can't sustain that move, that price action, we can see a rejection. It sets up a good trade opportunity. So this is heating oil that we're looking at. This market really performed to the characteristics of the state. We look at the condition, and one of the conditions, a market in this technical state will typically go with the corrective signal, but not willingly, with expectations of a stop and go trade. The technical state will provide short-term opportunity early in the session, but it's vulnerable to a drop back into a sideways trade and churn as the session wears on. And we had an early surge in the direction of that neutral positive shift. So here's our expectation of our condition, and we had a sharp drop back into the neutral area, with the market starting to stabilize near the end of the session. Okay, it's always observing price action within the context of the characteristics of the state to get clarity and to align your trading tactics. Another market in the same condition is the CAC 40. And if we look at the color profile, we have a lot of brown, which is neutral, but we do have a purple ADX. Look at the plot, and we see the market is kind of trending through. We have a positive shift through the neutral zone. So if this thing can build some structure, price structure, we may see this trend continue, but we know that the expectation is that if we do have that surge, we could fall back into that sideways mess. So here we had this shift here, big positive shift, and then we come into the next session and we don't get that that surge, initial surge. The market just drops back into more of a sideways digest. This is what we would call a non-event day, with momentum attributes of sideways and more of a non-trend type decrease in volatility condition. Soybeans are another market that's in the same state. Its profile is a little different, a lot of brown, which is expected. You had a market that's kind of surged to the upside. We're having this other neutral positive shift. Is this just a kind of a push into the upper extreme for a failure back into neutral? We don't have a lot of follow through potential, and the positiveness from the shift is kind of having the DMI system lean a little positive, but we'll overall have a general neutral condition. And this market doesn't even give us a chance. You had the positive shift the previous session, and then immediately overnight the market just falls back off and falls back into the neutral posture. So understand the color codes. You get more nuances. Know the indicator systems and what they mean. A trending indicator means is this trending? Does it have a trending signal going on? If it does it have trending ability with the ADX supporting it with a purple ADX? Is there anything on that from the oscillators telling us it might be overdone or a turning point signal? And use the dynamic channels to help identify what stage of that trend are we in, or are we potentially at an extreme. You can always note the MC value and identify how the changes have been going. What's the change? How's that plot been working? That gives you a nice view of how market states are shifting from one day to the next, and you can get additional insight to how did the market get to this neutral positive shift situation, and what's the expectation. If we're shifting positive into the top of the neutral zone, it's either going to stall out here or we're going to transition into a bull trend. If we stall out, we could have a sharp break back down to the neutral zone. It's all about gaining clarity, understanding the condition, the playing field that the trading is going to happen on, and observing price action within the context of the characteristics of that state. For more information, please contact us at info@jsservices.com. Thank you.